We're very bullish on real estate. It is the biggest industry in the world. It's not going anywhere. We can't have events like this. People have nowhere to live. People have nowhere to work unless there is great real estate. We will continue to invest, and we think it's a fantastic time to be putting money to work.
What we focus on is where the population migration is going. So we love the U.S. writ large, where the businesses are out moving their businesses to. Like rich people can move to Aspen and other places like that, but you can't move a whole business there. So Florida, Tennessee, Texas, all of the states that you see positive migration, I think is a great place to put your capital.
The sentiment in real estate, particularly commercial real estate, particularly office buildings, is so negative. It's so awful that I am just attracted to it.
Yeah, commercial real estate, really the talk of Milken this year, as of last year, with roughly 20% of the $4.7 trillion in U.S. commercial mortgages held by lenders and investors coming due this year. It's the reason why everyone's talking about it. I might create some pain out there for some folks who need to refinance, but it has lured a slew of investors armed with hundreds of billions of dollars to target commercial real estate deals. One of the most active players is Hines, which last month announced a new platform called Hines Private Wealth Solutions that seeks to capitalize on some of those troubles in the real estate industry. David Steinbach, the Global Chief Investment Officer at Hines, joining us right now. And this is got to be one of the biggest opportunities you've seen in your career.
Yeah, these only come around a few times in a career, and we definitely have a moment where there's going to be real opportunity. So it is exciting to see kind of what's ahead this year.
But how do you sort of cut through all the gloom and doom? No one's going back to the office. None of these buildings can be repurposed. How do you look at that sentiment and then look at those properties and decide there's something of value?
Yeah. So Hines is a global investment manager. We have about 100 billion under management, and we're in about 30 countries around the world. So it's a pretty unique perspective in terms of seeing real estate through a global lens. And I'll say it's not the same everywhere in terms of just different dynamics, not only macroeconomic policy, but also physically what's going on the ground in different places. And so even the experience of office has been very different around the world the last few years.
Let's go around the world. Let's start with the U.S. property market and the office space. Your exposure, what are you seeing? Is there going to be another shoe to drop?
Yeah, look, I mean, I think it's important to remember that what's happening right now is really 2 years in the making since interest rates started going up, right? So we're over 2 years into that. And so what this has felt to me has been a lot more of a controlled, managed process. Certainly there's a lot of pain in the system, but people have had time to work through the issues. And so I think time has been the key ingredient here to finding a way forward. So what we're doing now is much more looking on the horizon for what's ahead and where those opportunities are. Certainly there's a lot of things that need to get fixed still. I think private credit is a part of that, but I know equity is going to be part of that solution as well.
David, having said that, people talk about some of the office properties in like Midtown Manhattan and the Garment District. Nobody's going to ever want them in terms of office space. Will they have to be, what do we do with that? Some have said maybe the government needs to come in to help kind of clear some of that out. Is it fair to say that there's going to be office space that never is going to be used again? Yeah,
sure. I mean, look, office is a big sector in the United States.
Yes.
And there's a lot to that, right? I think what first needs to happen, and I think we're going to see it this year actually, I think we need to see some transactions in the trophy space. So the best of the best, we need to see some real trades and have price discovery there. And I think that will be a huge signal to the market once we really start seeing that. Right now, I mean, we're in conversations with people where there are discussions. There's still a bid-ask spread. I think that bid-ask spread will close this year, and we'll finally start see some transactions. That's what the market really needs to understand how to price the sector.
So does that mean, yes, there will be some properties that will just never be used again, office space?
Yeah, look,
like in New York?
Yeah, just like in the retail sector, 15 years ago. I mean, there's certainly going to be some things that aren't going to be repurposed heavily or torn down. But I know that there are high-quality office buildings where the rents are performing, the fundamentals are there, but the capital markets are not.
Yeah.
And so what we need to see is the transactions to be able to have some certainty for how to price the rest of the space.
As far as your investment strategy, do you take a hard look at the properties that need to be repurposed, or are you primarily sort of focus more on those ones that are already set to go?
Yeah, look, I mean, a part of our operating model is really tapping into what we see as a much bigger change in real estate investing right now. I mean, there's regime change in interest rates, and it's going to be a different world. The way I've described it is the last 40 years, it's been downhill skiing in terms of a sport, and it's going to be cross-country skiing for now, probably for quite a while. And so I think that, in that new sport, it really is a new sport. It's a new mindset, a new muscle. And I think there's going to be a real shift from a search from beta to a search for alpha.
Yeah.
And that alpha generation really is that local execution. And it takes a very clear-eyed view on what office or whatever the real estate product is and what's going to make it work and what's going to make it work in this new era of investing.
Cross-country skiing is really hard. I don't know if you've ever done it, but it's
hard work.
Yeah.
I was going to say with climate change, there isn't a lot of snow out there, so it sounds like it's going to be a little rough either way.
I am curious. I mean, we all kind of are aware of the issues in the U.S. commercial real estate market.
Right.
You have an international footprint here.
Right.
Kind of compare and contrast that with what's going on overseas.
Yeah. Look, I mean, it's definitely, it depends on where you are. So last year, certainly Europe was leading the recovery in many ways. There was more transactions. There was more pricing discovery points for investors to get comfortable with. But we're seeing opportunities still in Europe. Our business is pretty balanced. Last year, we were about a third in Asia, a third in the U.S., a third in Europe. I think the U.S. will now be more of our business this year. And we're certainly going to chase that. And in Asia, there is a lot of opportunity. In Japan, Australia, build to rent is a significant investment theme we see around the world. The United States is about 3 million houses short. That theme is elsewhere as well, and there's real reasons for that. And we think we can help solve some of the problems and bring new product to a lot of these countries.
Greater China, you've been there since 1996. What can you tell us about the real estate market in Greater China right now? And the government, do they ultimately need to do something to move this along finally?
Yeah, look, it's definitely been a tough situation, and we do have a presence there for a long time. We've been, we're still there. I'd say we're very cautious and being very careful, as everybody would be. We've actually begun to focus a lot more in India the last, I'd say, even 24 months. And India has been a huge area of growth for us, where we see a lot of expansion plans for a lot of U.S. companies, frankly, are setting up a lot of a deeper presence there. So that's been a significant pool of opportunity for us.
Do you still want to have a presence in China, Greater China?
I think, look, I mean, China's going to be one of the largest economies in the world. I think it's just a matter of what it looks like. We're still there. So. But we see a lot of opportunity in the entire region, frankly, and all of that region feeds off of each other in terms of how the broader economies work.
What does the price discovery and price transparency look like over there right now, though?
In Asia more broadly?
Well, specifically in Greater China.
Yeah. Look, I mean, it's like a lot of other, even the United States, there just hasn't been a lot of significant trades yet for the trophy type of assets. So. But that's the same thing in the United States. We're waiting for that. Like I was saying earlier, we're waiting for that as well.
But are there distortions, like government sort of distortions, given how much involvement they have in the property market?
Yeah, look, I mean, within the Chinese economy, certainly the local Chinese insurance companies, there is a lot of local capital there that I know a lot of sponsors are looking to now to backfill where international capital was. And so certainly within that context, there is capital and liquidity.
David, you have a massive team, a massive presence, and you see so much. You mentioned India. I think that's really, fascinating. If you had to pick one market globally where you're like investors, I think about the Bloomberg audience, that keep an eye on, is it India?
I think, yeah. I mean, look, India is a place of dramatic change, without question. And we're putting a lot of resources around it. We have a lot of opportunities that we're unlocking. But I see opportunity everywhere, honestly. And like I said earlier, the United States, to me, I think it's going to be where a lot of investors focus most on. It's probably where we're going to see the most transactions.
In the U.S.?
In the U.S.
Next 12 months?
For the next 12 months. The next 12 months, yeah. And I think it'll start with credit and move into equity. And so I think that's how investors are looking at it.
I have to ask you the interest rate question, the Fed question. We came into this year with expectations we were going to get multiple rate cuts. People are still holding out we get something. How much of your business right now would be dependent on a meaningful shift in interest rates, whether it goes down or up, for that matter? Look,
so one data point, if you look at the last 17 election cycles, what did the Fed do? About 2/3 of them, the Fed actually raised rates. Only about 6 of them, the Fed lowered rates, and 1 of them it held steady. So it's interesting knowing you see the patterns, right, in terms of like where past elections were. So I would say the Fed is likely going to take the right view for the economy. And whether or not rates have gone up almost 500 basis points in our business the last 2 years, whether or not there's a slight cut, it's flat, even slight up, it's not going to matter that much in the scheme of our total business relative to where we've been. So we're much more focused on how do we create income, how do we create value, how do we make the right investments today for a long-term horizon, because real estate is a longer-term horizon investment. So it's 5 to 10 years is often how investors are holding it, and so that's how we're underwriting it right now.
It's fascinating. David, thank you so much. But I just feel like so many of our guests here at Milken have said, a little bit higher, a little bit lower. It really doesn't matter. This is kind of the environment we're thinking we have to operate with.
Right. Yeah, I mean, you know, the other analogy I thought of, it's almost like car racing, right? So NASCAR, the economy is like we were in NASCAR. We're just going around a circle really, really fast. Now we're shifting into F1, where we just don't know what's around the corner, but we're still going really fast.
Yeah.
And so I think it's a new sport to play, and I think in this market we just have to be a lot smarter about how we're going to navigate whatever corner might be around the corner. So,
all right, well, we're going to have to leave it there. And you're so smart,
Thank
David
you.
Steinbach, the CIO over at Hines, that really knows more about the space. You love it so much. You asked some extra questions.
I know. Sorry. I know they're all going to be mad at me again.
Did you know our producers? Do you not know the hand signals?
I thought that means one more.